Hey everyone, and thanks for jumping back into the Cryptoverse. Today, we're going to talk about Bitcoin, the beauty of mathematics, part 38. If you guys like the content, make sure you subscribe to the channel, give the video a thumbs up, and also check out the sale on Into the Cryptoverse Premium at intothecryptoverse.com. You can, of course, get access to the chart that you see, as well as thousands of other charts, not only for cryptocurrency, but also equities and macroeconomics related as well. We do this video on the first of every month to help keep us in line with the general direction of the cryptocurrency asset class. While I spend most of the month looking into smaller details about ultimate directionality, by taking a step back every month, I think it can always help provide a somewhat fresh perspective on the asset class as a whole. Now, as always, I know the title of the video is Bitcoin, but it's actually on the entire cryptocurrency market capitalization. And as of August 1st, 2023, the total cryptocurrency market capitalization is coming in at a modest 1.163 trillion. The fair value logarithmic regression trend line is now at 2.074 trillion. This represents an approximate undervaluation of 43.94%. Now, we often spend many years in undervaluation territory. In fact, going into this year, one of the things we often stated was that we would likely spend the duration of this year below the red fair value logarithmic regression trend line, but above the lower green logarithmic regression trend line. Now, we have admitted that it is possible for us to deviate outside of those bounds throughout the course of this year, but any deviations would likely be short-lived, just like we saw in previous cycles. So far, this cycle continues to emulate more so 2015 than 2019. You can see that in 2019, crypto went into the overvaluation territory for a few months before ultimately coming back down and more or less tagging the lower logarithmic regression trend line. However, in 2015, you can see that more or less we went sideways until we hit that trend line. Now, the definition of sideways is often disputed in crypto. For me, this is the definition of sideways. However, when you live through it, it often does not feel like sideways price action, right? Again, if you were to look at 2015 and you were to go back and look at, say, the Q3 correction that occurred right before the halving year, we know that Bitcoin dropped about 50% and put in a double bottom. To me, this is still a sideways year. Now, the reason it looks like a sideways year to us now is because you know what came after it, and it makes it seem like whatever happened over here was pointless, right? It didn't really matter. But at the time, when you don't know what comes after it, this certainly doesn't feel like sideways when you watch the price of Bitcoin go up 90%. So Bitcoin went up 90%, and it still had a 50% correction. To me, in crypto, that is the definition of sideways, right? Now, some people might look at that and say, well, 100% rally isn't really sideways. It's crypto, guys. Okay, I mean, you're here not because of the occasional 2x move. You're here because crypto can often give oversized gains like 10x and 20x and even higher over longer time frames. So if we accept the premise that crypto can go up significantly in bull runs that tend to happen after the halving and also happen to correspond to higher liquidity in the system, then we must also be willing to admit to ourselves that a 100% rally followed by a 50% correction should be characterized as sideways. I would put forth the same idea today that 2023 has, and I said back then too, it has been characterized as sideways over half a year ago. when I said we were going into 2023, we're likely going to go half up and half down. And today, I say the same thing, that this year is most likely half up and half down. And we've already spent about half the year going up. We should spend some of the time going down at some point. And therefore, even a correction back down to the lows or near the lows, whether it's a higher low or a lower low, that should still be characterized, to me, as sideways. Because if in the future we get another bull run out in the, say, like the 2025 timeframe way over here, we're all going to look back at this and just say it was sideways, even if in the moment it doesn't feel like that, right? Now, why is this sideways? Why does it look like the market cap has barely changed? Well, my friends, it's because the market cap has barely changed. Bitcoin has gone up. The altcoin market has not. And if you were to take a look at total, which again, this is the total market cap of cryptocurrency, if you were to look at what it's essentially accomplished between last August and this August, not a whole lot, right? The valuation of the market, total market cap, is the same as it was basically a year ago. But how can that be? Bitcoin's gone up since then. If you look at Bitcoin USD, you can see that Bitcoin has gone up significantly since then. The reason is because the altcoin market, Total 3, has not. And Total 3 is well below where it was last August. You are living through the Bitcoin dominance rally. And the thesis of the Bitcoin dominance rally is that the dominance of Bitcoin should go up no matter the direction of Bitcoin USD. It doesn't matter if it goes higher. It doesn't matter if it goes lower. Liquidity from the altcoin market is going to Bitcoin. Now, some of it has gone to ETH, but I would argue that ultimately even Ethereum will see a devaluation against Bitcoin before the rotation of alts into Bitcoin is complete. And so total market cap looks relatively unchanged over the last year, but everything has changed. The composition of the asset class has changed. In August of 2022, the dominance of Bitcoin was much lower than it is today. You can see that it was actually about 39%. Today, it is at 49%. I would argue that within a year, we will see the dominance at 60%. And it could happen well before that. I wouldn't be surprised to see the dominance break up to 60% much earlier than a year from now. You could see a break to 60% dominance followed by a retrace and then another break to 60% dominance sometime after the halving. That's actually what we saw last cycle, except last cycle it was 70% dominance. If you look closely, you can see that we had one rally here to 70% dominance and then another rally to 70% dominance. So you could see something like that again, right? But maybe 60% is the thing to look at. So while total market cap has gone sideways, Bitcoin has gone up, the altcoin market has gone down. This is a rotation of money from higher risk assets like altcoins to lower risk assets like Bitcoin. Now, anyone in the equity market would scoff at the idea that Bitcoin is a low risk asset. And I would tend to agree. There is a lot of risk associated with Bitcoin, especially considering that it can drop 80% at times. But when we talk about a low risk asset, we're talking about it within the context of the asset class that it's a constituent of, right? Like that it belongs to. Okay. So when we say that Bitcoin is a low risk asset, it's not that it's low risk against something else, right? It's low risk against basically everything else in crypto. And even Ethereum is higher risk than Bitcoin. So Bitcoin is the safest. It's been around the longest. It has the highest market cap. It has stood the test of time. The altcoin market has not. And there are some that will likely survive and go on to put in new highs in a future cycle, but many of them will not. And I only tell you this because I have lived through it multiple times. You don't want to be the guy that bought every altcoin you could think of before the halving in 2024, only for you to somehow pick out every single altcoin that didn't budge an inch in a future bull market. Okay? The way you compensate for that is by ensuring your portfolio is Bitcoin heavy. Whatever, not to say that it has to be the entire thing. And again, this is not financial advice. This is just based on historical results. Historical results. Even Ethereum would fall to Bitcoin in any type of more traditional classical portfolio analysis, like modern portfolio theory. To maybe deviate for a second to go look at modern portfolio theory for an asset or a portfolio of just consisting of Bitcoin and ETH, the portfolio that maximizes your Sortino ratio is still 76% Bitcoin, 24% ETH. The portfolio that maximizes your Sharpe ratio is 72% Bitcoin and 28% ETH. But these valuations are likely going to change in favor of Bitcoin for the next several months. In a few months, when we look at this tool, it could show that it'll be 80% Bitcoin and 20% ETH, especially if ETH continues to underperform Bitcoin for the duration of this year, which it has been so far, and I think it will continue to do so. So when we go look at total market cap, if you only looked at this, you would think that everything is fine in the altcoin market. However, many of those altcoins have gone on to put in new lows. Many of them struggle to find a bid at all, and many of them will fade into the depths of the cryptoverse, never to be heard from again. Bitcoin will likely not fade. Ethereum will likely not fade. I do think ETH will underperform Bitcoin. I do think the USD valuation of ETH will likely get hit pretty hard later on as we get further into the year and before the halving, just like it did last cycle. But it should recover in, especially further out into the post-halving years. So when I look at this chart and people tell me all over Twitter that this time is different, perhaps I need to get my eyes checked because I can't for the life of me figure out how this time is different. In fact, this time is a much more tempered version of 2019. And in 2019, people were shouting from the rooftops that this time was different. And even in that case, we still came back down to ultimately tag the low on the regression band, the lower green regression band. We also tagged the low in late 2015, in Q3 of 2015, when we also had a recession scare. We had a recession scare in 2015, and we tagged the lower green regression band. We had a recession in 2020, and we tagged the lower green regression band. We had an inverted yield curve in 2019 telling us the economy was going to be weak. We have back then. We have an inverted yield curve today that tells us that the economy is weak. So, if and when the asset class tags the lower part of this regression band, that could very well correspond to the accumulation phase of a lifetime videos that everyone wants to see. But that hasn't happened yet. It doesn't mean that it has to happen. There's always a chance that it won't. There's no such thing as a sure thing when it comes to investing. There are likelihoods or there's probabilities that certain assets will outperform others, right? There was never any guarantee that the dominance rally had to be correct. Okay? And I still go back to this idea that most of the narratives that you see running around today for alt season and all that sort of stuff, those same narratives were pushed forth here and here and here and here and here. Narrative's one thing, but Bitcoin tends to stay the same as it navigates each market cycle. And remember, I did a video on this recently. In Q3 of the pre-halving year, you typically get a pretty substantial correction, ranging from like 48%, 49%, all the way up to around 80%. The one we had last cycle was about a 72% correction. So when I look at this in the context of what we've previously seen in Q3 of the pre-halving year, where Bitcoin has always gotten weekly closes multiple below the 20-week SMA, I can't help but feel that the asset class as a whole could very well tag the lower part of these regression lines down here. I also can't help but feel that the dominance will continue to go higher, much higher, in fact, probably on the back of the Ether Bitcoin valuation collapsing, and likely some of the altcoin market dropping against Bitcoin too. But a lot of that dominance, I think, needs to come from Ethereum. And I've said before, in the end, even the giants will fall, and that means the Ether Bitcoin valuation. So this is where we are today. We are 44% or so below the fair value logarithmic regression trend line. History shows us that if you take the percent difference between the fair value logarithmic regression trend line and the market cap, we go to 60, 65% undervaluation before the next move to potential new highs can begin. You can see that it happened last cycle, and it happened the cycle before that. In 2013, it didn't happen. But I know, some people would make the argument that this was all just one cycle. This was sort of like the pre-halving year pump followed by the bull market after the halving. And if you look at this, what you'll see is that, just sort of drawing the line across the page, there's a way in which, or there's this tendency of Bitcoin to come down to about 65%, 60 to 65% undervaluation before kickstarting the real move that people want. Normally that move does not occur until after the halving. It might start right just before the halving, but it normally doesn't really get underway until after the halving, which will likely correspond to the Fed cutting rates and to going back to QE. Now, we must understand something here, and that is that the reference point of this is a monotonically increasing function. So if we were to just simply go sideways until we hit the green logarithmic regression trend line, it would take until September of 2024. If the market cap of crypto in September of 2024 is the same as it is today, it would basically be at 65% undervaluation. I would argue that it's likely to go to the lower green regression line before September of 2024. Therefore, it could correspond to a market cap lower than where we are today. Okay? So this is my roadmap for the Cryptoverse. Okay? I look at it, I say, market cap has gone sideways. A lot of people will tell you that this has not been a sideways year. Let them say it. But I'm telling you, the context of history will show that this was a sideways year for the asset class. And that can include another 40 to 50% correction. And it would still look like a sideways year. It would still look like a sideways year, even with another 40 to 50% correction. Which is remarkable to think about. How much volatility exists within the cryptocurrency asset class to say that a 50% correction is more or less sideways. But that is what the context of history shows us. The context of history shows us that Bitcoin often falls below its bull market support band in August or September of the pre-halving year. The context of history shows us that the dominance typically goes up the minute Bitcoin starts getting weekly closes below the 20-week SMA. I understand that at the time of this video, the dominance is down slightly below 50%. But from what I've seen many, many times, when you get weekly closes below the 20-week SMA, that's where the altcoin market can quickly sell off against Bitcoin. A way to visualize this is to look at your trusty total 3 minus USDT divided by Bitcoin chart. The height of bull markets brings the market cap of altcoins to parity with Bitcoin. You can see this ratio up here as 1. The bottom of bear markets for alt Bitcoin pairs brings the market cap of the altcoin market to approximately 25% of Bitcoin's market cap. This still suggests that the altcoin market will likely drop against Bitcoin to the tune of approximately 46%. Now, you could always have an example where Bitcoin puts in a double bottom or a higher low, and total puts in a double bottom or a lower low. You could have an example where Bitcoin puts in a lower low. But the point is we are likely entering the phase of the cycle where we get that seasonal flush in all the scams and garbage that has been promoted this year, so that we can more or less start fresh going into the halving. So I would be looking for that, the devaluation of alt Bitcoin pairs, that continued rotation of alts into Bitcoin, the rotation of ETH into Bitcoin. At some point, there's no longer sufficient liquidity in the altcoin market to prop up the price of Bitcoin USD in the pre-halving year. And that's where you get that secondary scare that we've talked about by Bitcoin USD. And again, last cycle, the secondary scare was a higher low, right? Last cycle, it was a higher low. The cycle before that, it was a double bottom. We should be open-minded to what ultimately, if we do get a secondary scare, what it could ultimately be. But that is what we have seen Bitcoin do throughout these cycles. I imagine that this time won't be any different. So I know this, the last couple of years has been really difficult for a lot of people, especially those that have, been focusing mostly on the altcoin market. And I mean, unfortunately, many altcoins will not ever come back. But sometimes these are lessons that you just learn the hard way, and then you move on to the next cycle, and you're more well-versed in how the Cryptoverse operates. I'm still looking for Bitcoin to get that secondary scare, to flush out more of these meme coins and the scams, and then to start fresh as we go into the halving in 2024. That is my view. I will, there's plenty of other views out there. There's many views. There's a lot of people calling for new highs this year. I have fallen into those traps before, and we didn't happen. It didn't happen, right? I mean, Bitcoin just came back down. It flushed the altcoin market out again, and those calls for new highs were quickly withdrawn, and taken back. So I do eventually think that the asset class is heading to 10 trillion. That has not changed. We're about at 1 trillion today. It's very likely that we could be going to 10 trillion here in just a few years. So try not to lose sight of the bigger picture within this. Some of you would honestly just be better off tuning out of the Cryptoverse and coming up with some type of DCA strategy for the coins that you want to have, and then just forgetting about crypto for a year or two. But this is my view on the crypto market. I hope I've articulated it well, even though I know that doesn't always come across as well as I want it to. But that's where we currently sit. I think that we will likely go to 10 trillion. It could happen in the next cycle, plus or minus a few trillion. And as we go to sleep at night, we cannot help but wonder, what's a few $1 trillion among friends?